Yeah, we're back. I mean, look, Joe, let's remember what we're talking about here. We're talking about something like 140, 150 million jobs and trying to figure out did it go up by 100 or 200,000. The confidence level on this is plus or minus 100,000 jobs. So, yeah, this is a good number. That 3-month average at 180 is still a good number. Anybody who's concerned really that we have a weak job market, I think, is wrong. I like the way Alon characterized it as pretty broad-based. I just looked down the line here. I've got negatives in manufacturing, which, by the way, is contradicted by a lot of stuff out there. The ISM report shows very strong manufacturing job growth. If anything, maybe that's an early sign of some possible impact of the trade wars that are out there. But I'd say it's very early days to say that because you had strong numbers in July and June. And then retail is the other negative, along with information. Government down 3,000. The rest are pretty strong. Construction up 23,000. That's a good number. And that participation rate ticking down, I was going to talk about that in the last hour. We do not appear to be drawing people back into the workforce. Had a conversation with Alan Kruger out in Jackson Hole I've been meaning to tell you about, which is I said, Alan, you're wrong. All these people that are coming back in. He goes, no. These are the unemployed we're putting back to work. It's not like we're bringing new people in. There was a big decline. I don't take it, I take it with a grain of salt because it's 1 month in the workforce. I think we're about even on the participation rate. What's happened is I think the strong employment market, the strong economy has kept maybe more people from leaving, but does not appear to have drawn a whole lot of people back into the workforce.
Although, look, the one number that really jumps out is if you're looking at the average hourly earnings, up 0.4% is quite a bit stronger than expected, and the year-over-year number, 2.9%. What does that mean?
Yeah.
Sorry, Kate, go ahead.
We were talking about this before, about how the wages was the most important thing to kind of to focus on in this report. And, this is a little ahead of where expectations were. And as I was mentioning before, I think this is really important to focus on as we think about what earnings could look like and what margins will look like over the next quarters.
And I should point out that the futures got weaker on this number. You're now talking about the Dow futures down by a little over 70 points. We were down 30-something as we were heading into this number.
Representing that anxiety we were talking
about. What the Fed will do as a result.
I think that's exactly. I mean, look, this is a report that obviously keeps the Fed fully on track, but I would have said the same thing if this was 150,000. There's one thing I do want to point out, particularly with regard to what Steve was saying. Look, I get it. Most people just want to look at the headline stuff and keep it sort of simple. But I think what you need to actually do is you can't just look at headline participation rates. You actually have to look at the prime working age cohort. And the participation rate there has actually done nothing but rise. Right? I mean, this is, and again, this is not like this esoteric idea. I mean, the headline labor force part rate is in secular decline. But the structural stuff, right, the cyclical stuff, the prime working age cohort is rising.
Yeah, but it's rising with room to go. You're at 82, 82 and a half. You were at 83 and 83 up for years going into the recession. And what I think people need to realize is it's not the unemployment rate that brings people back into the labor market, but it's wages. People decide to return into the labor market because they think they have a chance to make money, not just a chance to get a job.
When does reform of certain, whether it's disability payments that have been sort of, I don't know whether I call them abused, but some people have found it more advantageous to stay at home necessarily than go back to work.
I think if you could address, I think when you address child care costs, I think when you talk about the expectations of a two-income family,
everybody's blaming it on the baby boomers
costs,
again. But when does making it better to work than stay home? When does that start bringing people back in?
It's the right question. It's the right conversation we're having, and here's an answer to that. If again, looking at the prime working age cohort, because this is really the right way of looking at it.
There are people that aren't baby boomers that are sitting at home too.
That's exactly right. So when you look at that number right there, it's funny. If you look at not in the labor force, right, that number really has done nothing but rise, and it will continue to rise. Again, structural idea. Look at that number, the not in the labor force for the working age cohort. Guess what that's doing? It's falling. And guess where they're falling to? They're falling from not in the labor force back into the labor force employed. Like literally, like the transition is usually you go from not in the labor force back into the labor force unemployed. These people are going in employed. Like I'm telling you right now, it does not get any better than this, and people I think are really missing the sort of the boat on that.
So Santelli, that might have been something you asked, I guess. What do you comment?
Well, first of all, I'm not sure I agree, and I can't tell the voices from the names about the categories, the demographics, and labor force participation rate. There's a lot of skewness from the 34 to 55-year-olds that never straightened itself out in a proper way after the credit crisis for all the reasons you inquired about, actually, Joe. See, my issue is we could label it structural any way we want. You know what I see when I look up at it? We have less people working, supporting people that aren't working, retired on entitlements, which they paid into when they deserve. The problem is the math doesn't work. The deficit keeps rising. The tax reform keeps paying for itself, but we keep adding on to the spending in light of that. I know whoever that come on was, if we made it so we didn't spend a penny this year more than last year, and all we did was tax reform, I bet that the deficit would not be increasing very much.
Well, you could bet that unicorns would fly around, but it wouldn't happen. We have $1 trillion annual tax cut.
Well, you're an economist, so most likely that's where your money is.
No, look. At some point you were screaming about the deficits. I remember when the Tea Party rally kicked off. And now we've had 10 years of growth with the fundamentals laid in starting in June of 2009. And these Trump tax cuts have spiked an already happy economy. We're going to get a sugar crash. Didn't start in June of 2009.
See, the nice thing about non-economists, we look at pictures and charts. I see November 16 that the market's changed. I'm not sure about the 2009. When you go down, you usually bounce in a normal economy unless you're a non-developed economy.
Lanhee hasn't been in. Lanhee, you can, I mean, we got a Brookings guy here. You're at the Hoover Institute. Maybe you have a different view?
Yeah, no, look, I think obviously the tax reform and the regulatory reform has made a difference. I think to argue otherwise is to deny the truth. But, you know, more broadly, the issue here that we're looking at, I think it's interesting that U6 measure, which is the broader measure of unemployment, is still elevated compared to what we saw when the job market was comparably healthy back in, let's say, the mid to late early 2000s. And that suggests to me that we still have a number of folks maybe that are working part-time for economic reasons. And the question's going to be, as this wage competition increases and we start to see wages grow, this wage growth number we saw this month was tremendous and really good. The question is going to be, as that begins to expand, is that going to place further pressure on these folks? Are we going to see that U6 number remain elevated because people are not going to be able to come into full-time work? I think that's one trend worth watching as we go forward. But there's no question this is a strong labor market, and policy has had something to do with it, absolutely.